I get this question a lot. Why hasn't my financial advisor not only talked to me about alternatives as a broad umbrella, but real estate specifically as an asset class that I should be considering?
Yeah, I mean, I think that's a really good question. In fact, I had a call yesterday with one of our existing investors who wanted to bring his financial advisor into conversation. I'm meeting with another one of our investors on Thursday that has a couple $1 million with us and his financial advisor. I think there's a number of factors that go into that. Number one, I'm going to call it, I guess, complacency. Many financial advisors, they have a book of investments and opportunities that they typically work with, and they have built a plan around, or their firm has built a plan around, and so they have a little bit more of a narrow focus. And what a private investment brings to a financial advisor is another investment that they have to figure out how to run the due diligence on and how to do the underwriting for their client on. And what I find is that many financial advisors don't have experience in the private space. And so they don't know how to underwrite that deal. They know how to look at a stock and say, hey, this is trading at 2 or 3 times book value. There's some good opportunity here. Or, hey, this is trading at 4 or 5 times book value, and it's way overpriced right now. And there's a number of factors that they know how to underwrite that. But with private investments, they oftentimes it's new to them. They have to compare apples to oranges. They're looking at stocks, bonds, mutual funds over here. They're looking at privates over here, and they don't know how to compare the two. You've got liquidity, you've got illiquidity, you've got a short-term plan and a long-term plan. You've got a long-term focus here. You've got higher growth potential here. Oftentimes, you've got tax advantages here, no tax advantages over here. And so there's a number of factors that go into that. And then the next thing is, let's call it what it is. Oftentimes, financial advisors look at it as they're losing that business, and so they're charging an asset management fee on their portfolio. And let's say you've got a $5 million portfolio with an asset manager, and you're looking at moving 20% of that into private and alternatives or real estate. So they're losing $1 million in AUM. And oftentimes they look at that as loss of money. There is, with our situation, we compensate the financial advisor as if that book of business is still under their AUM. And so there's an opportunity there. And so I think that's why many financial advisors have found beneficial to work with us. We've got a number of them that have worked with us, and it's been a great situation. In fact, we've got one that I was on the phone with him and a couple of his clients yesterday. He's allocated about $22 million with us. And has a number of clients that he allocates through with us. And so, I think it just boils down to what the financial advisor's experience is, what their ability to underwrite a deal is, and then selfishness. Are they losing a AUM and the form of a fee? And so, I think you've got to take all that into consideration as well as an investor. Does your financial advisor really have what's in the best interest for you? Because, you could go, put your capital in a REIT, and you're going to miss out on 3 of those 4 keys that I talk about. You're not buying at a discount. You're going to get some appreciation. You may get a little cash flow, and you're definitely not getting any tax advantages with a REIT. And so, or you've got the BlackRock REIT right now that has turned off distributions and redemptions. And so, that's no different. It now it becomes a less desirable investment that sounds like it's real estate, but it's not really, that now all of a sudden has the same illiquidity factors as if you would have gone into private investment real estate anyways. So I think those are the factors that you need to pay attention to as an investor looking to place capital, and specifically if you're working with financial advisor as well.